Hi guys, how you all doing? I hope you're good. And since I haven't given you anything in like 4 days, so I decided that today I'll give you two videos. So which is gonna be gold and US 30. And if you're new here, make sure that you check out the other videos, because here this is where I do market analysis and give trading tips regarding you know forex, or the markets in general. And if you are interested, there is a mentorship also. If you want to learn directly from me, there's a mentorship, but it's just that I just want 7 people and I got them for now. And we started with the program. So far we had like 2 sessions, so I'll take another 7 people later. So now let's get started with the US 30, because we haven't done this one in a while, and I feel like the structure might have changed a bit. But always, let's start at the top. So this is our monthly chart. If I was to comment on monthly chart, I would say there's no a lot of stuff that's going on. We just have the price now being inside our support, the monthly support, as you can see marked there. And this one that I'm marking here is our monthly nearest area of resistance. Remember, you always mark your support and your resistance. So it means now currently the price is inside the support, and this is the resistance on monthly. But one thing that I want you to take note of is that the price, the first time it came to the support, was with this, the pin bar. It came, touched the support a bit, and then it was rejected and went all the way up there, which is like it went there and then now it's coming again. And remember, when you form a pin bar, and you don't go above the pin bar, then it's pointless. You see, now the next candlestick came back and went lower than the pin bar, but it still played inside the monthly support. And then now we are here for the like 3 months now, playing around the same level. And then now we've got this candlestick, and it's also around the monthly support, but it doesn't change the fact that the monthly support is still holding. Until it's broken, we are not gonna trade against it, especially if you're trading bigger scale. But on smaller time frames, you can just trade, because remember, it's like a smash and grab there on smaller time frames. The price action on H1, like before it hits the opposing structure on H1, it won't even cause any change in the structure here on monthly. But if you're trading weekly, then you know that it's gonna cause the structure change here on monthly, which means you can't trade against these guys. So that's all that you are having on monthly. Let's go down to weekly and see if there's anything we need to take note of. So here on, let me see the way I drew. I think this zone that we have down here is this one. So let's just see if it's gonna appear on monthly. Okay, no, it's a different one. It only appears here. So the one that we are seeing on weekly, it belongs to this, but we know that we are inside the monthly one. So currently the price is inside the weekly one. And as you can see, when it was coming down here, now the price does have a swing, which means we have a bearish trend line on weekly. And if we have a bearish trend line, this is our weekly support, and the opposing weekly resistance is up there, and there's your bearish trend line, right? And when the price hit the weekly support, what did it do? It got rejected, and it even formed the engulfing pattern, as you can see, because the bullish candlestick swallowed the previous candlestick, and it went up, and it reacted to around the same trend line that we're talking about. We don't predict that these things are going to be broken just because the price is coming from a monthly chart. No, we're just saying monthly is bigger than weekly, and the price has a higher chance of respecting the bigger time frame structure as opposed to the smaller time frame structure. But it does not mean the price can't react from this. This is still active until it remains, until it is broken, right? So we got the thing, the rejection, or no, not the rejection, the engulfing bar. We went up to the trend line. We had these interesting candlesticks with the tails below, which indicate that there's a bullish pressure. But now the bullishness couldn't continue and break above the range of those candlesticks. Maybe challenge the trend line and even push to towards the opposing zone, which is the resistance that I mentioned earlier, but rather it went down and went lower than what the those pin bars, sort of the pin bar or those long tails that were formed in the past 2 weeks. But even though we went lower than that, we still haven't broken this. So it's still not yet safe to sell on weekly. Why? Because you're just inside the support. So you can't sell on weekly while you're inside weekly support. So that is all that you have on weekly. Let's go down to daily and see what we have that side. So on daily, this remains the weekly area of resistance that we marked that side. And if you watch the previous video, I'll just remind you, I'm not gonna take long, I'm not gonna reanalyze it. I'll just say when we were going down we had this, and this was the opposing resistance here. This was the opposing resistance on daily when we were going down, this one here. And the price formed the pin bar, it went up and it broke the, what do you call this, it broke the trend line. So remember, you ask yourself, which area of support broke the trend line? Is this one here, because this is the support that started the move and gave us the candlestick outside the trend line. So this support broke the trend line, but it's not the one that broke the resistance. Why? Because after forming this support, we went up, we had the market pause, and then after the market pause, that's when we went up and broke the resistance, which means this market pause here, this market pause is the one that broke, the one that caused the break of that resistance. This market pause around this level. So which means that we've got two levels here, but the nearest one is this one. The one below broke the trend line, the one above broke the resistance, which means we can remove the one above, the one below for now, and focus on the one above, which is the one that is the closest one, which is the one from here to there. And the price, after doing that, it came back to it. We spoke about this one, looking for trades here because of what this zone did, and the price reacted from it. It went up, and then I just put this horizontal line here to say what, as much as it's going up, we don't yet have a bullish trend line. Why? Because remember, for us to have a bullish trend line, the price must be bullish, the price must be going up, the price must be forming higher highs and higher lows. In this case, that's not the case. Why? Because for us to put the trend line here, we need this to be a higher high. This must be higher than that. So if you see someone putting a trend line there, but why are you having a trend line where you don't have a trend? Because this is a trend line. For us to be in a trend, the uptrend, we need to be forming higher highs. If we don't have higher highs, we don't have uptrend, we don't have bullish trend line. So this does not exist for now. So that's why I have this guy here, so that I wanted to check once the price broke above there. If it did, we were gonna put the horizontal line, but it didn't. It just went until somewhere here, which is still around the trend line that we spoke about, still feeling the heat from that weekly trend line, and then it got rejected again, and then now it's back inside what, it is back inside what do you call this, the daily pause, the market pause that we formed here on daily. But another thing to note is that there's a lot of bearish signs here. Number one, on weekly, on monthly, what did we have? On monthly, the first sign of weakness is what, the price went lower than the pin bar. That's the first sign of weakness in the bulls. And then on weekly, what did we have? We had nice candlesticks here with the tails, but the price went lower than those tails. That's another thing that shows that the bears could be really coming in. But I'm not saying they're going to violate this, but it's possible. So we'll just watch next week and the other coming weeks or whatever. So now on daily, is there any sign of weakness? Here's another sign of weakness on daily. We went up, we failed to go up, we still felt the pressure here, and we are coming to the zone for the second time, which means, remember, the more a level is tested, the weaker it gets. So that's another sign of weakness, but it seems like it might form a pin bar. But remember, if it forms this as a pin bar and the next day we don't go above that pin bar, then it's pointless. But the one thing that you need to note is that this support is being tested for the second time without price even breaking the area of resistance, which means the bulls are trying to make strides in that direction, but the bears are managing to push the price all the way back, which you can see that, judging based on this current time frame, the bears seems to be having a lot of power more than the bulls. But until this level is broken, it is still active, and this weekly trend line is also closing in on the price action. Remember, as the price is moving to the right like that, it's gonna be more like it's gonna come down like that. At the end of the day, the price must decide whether it wants to break this support or it wants to break the trend line, because remember, both of them, they belong on weekly. You see, so price is closing in, but the price is not making any progress to the upside or to the downside. So in terms of the what you call this, the trend on daily, we don't yet have like a bullish trend. Why? Because we just did this and I told you we didn't have a higher high. Yes, we violated the structures going down, but we don't yet have or how can I put this? We can say, okay, we are leaning towards the bulls because of what? We broke the bearish trend line and we broke the daily resistance, but you don't have like a area to place your trend line, so which is a negative thing. So let's check what's happening on H4. Remember, here we're just seeing weaknesses, weaknesses, and weaknesses of the bulls. So now let's talk about what is happening here on H4. So at the end of the day, you must be able to link everything together. So on H4, this was the nearest area of support, this one, which is the one after forming it. The price went up because it kept on being tested. Remember, I said the more a level is tested, the weaker it gets and the higher the chances of what? It being broken. So here, when we were coming back, we did have the momentum. Like the momentum was to the downside. As you can see, we had a lower low. Why? Because this was the low, the price came back, and as much as it is inside the same zone, but it went lower than this point, which is why we had this. And on daily, we don't have that high, which is why we couldn't put a trend line. So here we can say we had this, and having that, it's just that here the zones, they are just too much, It's like a zone on top of another zone and stuff like that. So it's just the price action is not nice. It's not nice at all. But the price came back and tested around the same area, because from here that's when we went up and broke the trend line and also broke the area of resistance there. So the price came back and tested it. And if you were to take a trade from there, or if you got a trade there, because remember, you're buying it because this level is the one that caused the move to the upside and broke the trend line and broke the area of resistance. So if you're looking to go long, where are you going to exit? The next opposing zone should be around here, from here to there. If it gets broken, it's broken, but we're not going to predict that. And then it didn't get broken, and then it came back, and now this got violated, this one, and the price came back and tested the very same zone that we're talking about, tested it here, and then it got rejected, went up, but then it came again. That's when it got violated. So it means this level here, it's been holding for a very long time. Eventually it got broken, and then now it's only a matter of saying who broke that area of support. Is the move that started from here. After forming this zone, we went down and broke that. So which means this is an area of resistance. This one we can remove, is still higher than the current one, this one. So this is an area of resistance that is seems to be strong, and it is in line with maybe we can say, to add the resistance to you if you are trying to go short, it is in line with what the price broke the it went below the sort of the pin bars or the tails of those candlesticks, and it is also around the bearish trend line. So that's the other things that you can add to your basket when you're looking for reasons why you are trying to go short. And this one, because it got violated, you remove it, but you can't trade without having a target. Remember, if this is not here, then where is the next area of support, so that you know that if I'm taking a trade, I'm going to exit here. So all you have to do is to say, this area, we broke it. Then you go down, look for the next one, and then you say, okay, so it means the next opposing structure will be around here, which is the one that you can see. That's where the price turned before going up. You see, that's how you mark your area above and your area below. So it means currently the active area below, or the support on H4, is this one, and the resistance is there. But the odds are pointing to the downside. So if this one gets broken, you just go back, the next one will be around here. So that's how you trade. You must always have that zone below and the zone above. So currently the price is approaching this, and it is like we're saying, the odds are pointing to the downside. As much as we are still inside the monthly area of support, the weekly area of support, but even on both time frames, the price is not really convincing to go up. But it can go up, but it's not convincing. So just look out for maybe reaction from this level. Then maybe you can get a trade and target. Remember, this level is still active. This level that we marked here. So if you were to get a trade, you can target this guy here, the very same level. But if you don't get a trade, then it means the price will go and break it. And as much as this price action, it's very ugly. So it's not easy to put a trend line because of what it did. It moves from this and it comes down here. That long rejection candlestick, that long rejection, this one is the one that is making it difficult for us to draw a trend line, because remember, this is not a swing, this is just a market pause, and then we went down. So we're not going to use this point, so which means the swing that we had was up there. So if it looks like this, then where are we going to put it next? If you put it like this, you can see it looks weird, and it's too far. I mean, it's almost horizontal, so the slope is not so nice, but it is what it is. But now, for now, we can say this is an area where the price might struggle to go above. Why? Because this area, it was very strong. It managed to push down and break. Remember that level that we had here, break that area of support that's been holding for more than 4 times before. So we can expect some reaction there. We can look out for it. If it doesn't give you any reaction or any signs of reversal, be it pin bars on your execution time frames or engulfing, then it means you can't trade, you can't take a trade. But if it gives you those and then you trust them and then you decide to go in, you are going to be targeting this. But if it doesn't give you, it means the price will just go up and maybe break, and then maybe you can mark an area of support and say, now let me try and go to the upside. But still, we have a lot of resistance against us, which is what, starting with the weekly the weekly trend line. So you can see that the bulls, they still have a lot of work to do for them to win the battle. I mean, still continuing in the same direction, even though on smaller time frames it can look like there is an uptrend and all that, the price changing. But remember, on the bigger scale, we are still very much to the downside. But now we are still inside the support. It doesn't change that, but it doesn't mean I can't take trades like that on smaller scale. So that's what you can look out for on H4 and on H4, some reaction from around there and target this. Now let's check the last time frame, which is what I don't normally like, but yeah, let's just check what's happening on what's this, on H1. So if, let's say, on H1, remember on H1, you say you are trading H1, the price comes in and hit that area of support here, which is the one that got broken, that was broken on H4. You still remember it. You are trying to buy from it and target the opposing structure. Now, did price give you any reason to go long here? Did it give you any maybe bullish engulfing, or any bullish rejection? No, there was nothing. It just moved all the way down and broke that area of support on H4 and moved to the next one, which is the one that I marked here. We marked here. And when it moved inside here, that's where it gave you the pull, the rejection candlestick. And then you can say, oh, this rejection candlestick is formed inside the H4 area of support, so let me try and take my chances. But when you're taking your chances there, you can either buy it immediately, or you can put a buy stop like I showed you. But remember, if you are trading on H1, you need to target the H1 opposing structure, which is, in this case, what you call this market pause that formed when you're going down. Look what the price did. It touched it and then it got rejected up until here before coming back and breaking it. So it means on H1, the trend line when we were going down was from this to this, was like this. This here, we agree that it's not a swing, because remember, when you're drawing trend lines, we just want swings. This is not a swing, this is a market pause. It's an area of resistance, yes, but that area of resistance, we can use it to take trades, but we can't use it to draw a trend line. So the price came back to it, and then it went up, it went down, got rejected. Now it's coming back for the second time. It broke that. What did it do? So it means this market pause. So it's more like, after forming this, the price went up and then it paused here and then it went up. When it went up for the second time, it broke the area of resistance and it also has a candlestick outside, which means it broke the trend line. So now it's a question of saying on this time frame, because we broke the H1, which is the very same time frame we're looking at, we broke the H1 area of support, resistance, and also the bearish trend line. Who broke those structures? It has to be an area of support, which is the nearest area of support is this one. We agree that this is where the move started that broke those two structures. So this is an interesting area of support. So if, let's say, the price doesn't touch there and then it comes here, right? Doesn't touch there, because remember, if it touches that H4 zone, the H4 now is way too big, and the H4, it accomplished what? It broke that H4 area of support that we spoke about. Remember, this is why I said you're going to be searching for reversals. So if the price doesn't touch there but it comes down, you can hope that maybe it will have that last push to the upside, so that you can exit, and then hope that it will react from that and go down. But sometimes it might break it, but we're just saying, based on the current structure, if it was to come back here, you can take your chances there and hope that you will have that last push into the zone. When it gets into the zone, remember, this will be the H4 area of resistance, and that's where you'll be searching for resistance to go to the opposite direction. Maybe you can even mark an area of resistance, H1 resistance inside that H4, maybe around here, deep inside the zone, to say this is the zone. Maybe if the price was to come inside here, because remember, the deeper the better. Why? Because the profit margin will be larger. Unlike if you enter here, the profit margin will be very small, you see. So if you get it from there, maybe it will come all the way down. So that's how you should tackle this one. So if you had gotten it, this one, applying all the rules and all the reasons that I'm saying now, and decided to go with this one, then you were spot on. But you would have exited at the next opposing structure. In this case, the price reacted from it. It was with just a pause, and then went up and broke the trend line. Maybe if it comes back before hitting this higher time frame H4, because remember, this is H1. So if the price it doesn't hit this H4, it comes back, maybe we'll hope that it will have that last push into the H4, then you are done. Maybe you can search for trades in the opposite direction, or you can, if you get a buy here, when it goes inside there, you can close half and then move the other one, mark, tighten your stop loss just in case the price doesn't respect this one and break it. Then you're still in the trade. But now I always suggest that if you are still trying to grow your account, just take a trade, target the opposing zone, done. You don't have to try and act smart, because if you're trying to outsmart the markets, sometimes it's gonna backfire. So just play it safe. So I'm gonna end it like that. So that's what you can expect from this one going forward. And as for Nasdaq, hold on to that one. We will do it on Sunday. So I just wanted to update you on gold and US 30 for today. And then Sunday, before the market opens, we can do our favorite Nasdaq. And yeah, I hope you have learned something in terms of how you should approach the market, and how you should, do the analysis on all the time frames. And when you're making your decisions, you should make sure that everything that you saw on those time frames, it should agree with each other. You should make decisions taking into consideration everything that you saw on those time frames. This is what I'm teaching the guys that I'm currently teaching. I currently have in the group. There are 7, I think, or 8. And after 2 months, I know they'll be able to do this by themselves. And then that's when maybe I can take a second group, or I can take a break. I'll see. So for now, I'll be supplying you guys, the ones that are not in the group. I'll be supplying you guys on here on YouTube, but it won't be consistent, unlike the guys that are in the program, because there they can interact with me. We can, they can ask questions and all this stuff. But I'm pretty sure that by the time we get to second month, they should be able to open a chart and then explain to me what is happening on that chart, which is what I want, which is what they paid for, so that at the end of the day, they can analyze on their own and they won't be paying anyone for signals. Imagine blowing an account with signals that you don't even know why they said you must buy. So try and avoid those. All right, I'll see you guys in the next one, which is probably gonna be on Sunday when we're doing Nasdaq and maybe one other currency, or we can even visit these ones just to see if the price action from tomorrow on Monday that is going to happen tomorrow, which is a Friday, won't affect, cause any change in the structure. But yeah, we'll see. All right, cheers guys. I'm gonna end it like this, and I hope you learned something. Bye bye. I'll see you in the next one.